Sasol has reported a sharp drop in interim earnings. That's as weaker oil and chemicals prices and nearly 8 billion rands in impairments weighed on profits. Headline earnings per share fell 34%, while earnings before interest and tax plunged 52%. But on the positive side, strict cost controls and sharply lower capital spending helped the group generate free cash flow of almost 800 million rand. It's the first time in 4 years that the group has managed to generate positive free cash flow. Sasol says disciplined spending and operational gains should support further debt reduction. But the firm has warned that global conditions remain challenging. Spar says margins in Southern Africa remain under pressure. That's as low food inflation, tough competition and aggressive promotions weighed on profitability in the 18 weeks to end January. Wholesale turnover rose just over 2%, while retail sales increased 1.7%. The group says margin recovery will be gradual and weighted to the second half as corrective actions in KZN and cost-cutting measures take effect. Looking ahead, Spar is also advancing the disposal of its UK business, and it's also facing a 168 million rand lawsuit linked to its SAP rollout in KZN. Further detail will be available when the retailer releases its interim results on the 10th of June. Nedbank's proposed acquisition of a controlling stake in Kenya's NCBA has cleared a key hurdle. The bank says Kenya's Capital Markets Authority has granted it an exemption from having to make a mandatory offer for 100% of NCBA shares. That approval was a key condition for the deal to proceed. Nedbank has offered 13.9 billion rands for about 66% of NCBA. It has also secured firm commitments from shareholders holding about 77.5% of NCBA's shares to accept the offer. The transaction remains subject to other outstanding conditions, with further updates expected in due course. Telemasters expects a sharp rise in interim earnings. The Telecoms Infrastructure Group says earnings per share and headline earnings per share are set to increase by 94% for the 6 months to end December. This would take EPS and HEPS to 0.68 cents from 0.35 cents a year earlier. South Africa's largest medical scheme bodies are opposing plans to scrap tax credits. The Board of Healthcare Funders and the Health Funders Association have called on Finance Minister Enoch Godongwana to keep medical tax credits in play and increase their value in the upcoming budget. This comes as the Department of Health wants to phase out the credits to help fund the NHI. The associations have warned that removing them could force hundreds of members to drop private cover, which would place further strain on an already stretched public health system.